Good evening, everyone, and welcome. Well, it's been a kind of 2 steps forward, 1 step back year on Wall Street, and today, maybe a little surprisingly, was a step forward kind of day. The catalyst, really, was that there was no negative catalyst. There was no deterioration of the situation in eastern Ukraine over the weekend, thankfully. In fact, Ukraine's and Russia's foreign ministers met for lengthy talks in Berlin with moderate progress cited by Ukraine's Klimkin. Iraqi and Kurdish troops retook a strategic dam in northern Iraq and Gaza. And in Gaza, Israel and Palestinian militants reportedly extended their truce. In the U.S., home builder sentiment improved, and the dollars were flying as Dollar General bid $9.7 billion for Family Dollar. Put it all together, and you have a recipe for a 14-year high for Nasdaq and a rally in the S&P 500 that took it to within a percentage point of an all-time high. Here's how the stocks finished the day, at their highs, by the way. The Dow up 1%, adding 175 points. Disney and Home Depot, all-time highs for those two. Nasdaq was up 43. It ended at its highest close since March of 2000, and the S&P was up 16. Crude oil down 94 cents. It settled at 96.41, lowest level in 7 months on those easing tensions in Iraq, and news that Libya has increased production. The falling price of oil helped lift airline stocks, including United, Continental, American, Delta, Southwest, and JetBlue. They were all up more than 2%.
Our guest tonight says investors are buying up stocks of American companies because the U.S. is the global safe haven. He's Scott Wren, senior equity strategist at Wells Fargo Advisors. Scott, nice to have you on the program tonight. I guess the question is it safe? Is it safe for investors to be putting new money into the market given all of the uncertainties that are going on around the world?
Susie, there really are a lot of uncertainties. I think that on a relative basis, the U.S. is safe. And the reason I say that is because I think the economic growth here and the modest inflation is something that investors can count on. And I think that's why the money's coming here.
You know, Scott, the president last week took some heat for an alleged foreign policy principle that was sort of don't do anything stupid. And that was sort of, is that your principle? If the economic principle or the stock market principle is the U.S. is good because everybody else is bad, is that really a long-term formula for success?
That's really probably not, Tyler. But here's what I would say is I believe this modest growth, modest inflation environment that we've been really living with for the last 4 years is probably something we're going to be living with for the next few. Stocks can do well in that type of an environment, especially when that growth is pretty dependable, which I think it is, and valuations are very reasonable. They're only in line with the average if you look at something like a PE. So I think the stock market's a good place to be.
Scott, I want to ask you about the Nasdaq because it's been red hot recently in spite of all this geopolitical stuff. Now, we know that it's driven a lot by technology stocks, but if things do get a little bit intense on the geopolitical side, what does that mean for technology stocks? Will the Nasdaq just sell off like all the other stock averages?
Well, I think that large cap technology, which drives the Nasdaq, it's a big driver of the S&P 500. I think in the type of an environment that I envision, tech's going to do well. I think it's a place to be overweight. But if there's some turmoil in the market, these smaller cap tech names, they're going to feel it. I think the larger cap tech names are just like most stocks because there's a lot of uncertainty. So I expect higher volatility, not just in tech stocks, Susie. I think for the market as a whole over the next couple of months, we could see some good buying opportunities.
Scott, is the end of the Federal Reserve's bond buying, known as quantitative easing, it's supposed to end in October, has that been priced into the market? And I ask because the last couple of times the Fed stepped back from pumping money that way into the system, stocks stumbled.
I think that the Fed realizes that particular QE program, quantitative easing program, was pretty ineffective. I think the market likes it that the Fed's starting to get out of this. Always, Tyler, and you know this as well as anybody else, when the Fed starts to reverse course from easing to tightening, you don't know the timing. There's lots of uncertainty. It causes volatility. But the tapering program they have going on right now, the market's completely fine with that. That is going to have absolutely no effect on the stock market, in my opinion.
All right, we're going to be talking a lot about the Fed and all of this kind of stuff as the week goes on. But Scott, thank you so much for coming on tonight. Scott Wren of Wells Fargo Advisors.